What did my worst ever day as a trader teach me? What did I take from that day? So I've kind of touched on what happened a couple of times on this channel already in previous videos. But basically, I'd gone through a phase of very, very rapid account growth. Now, looking back on it, I was trading like an idiot, and I suppose I knew that at the time, but I was seeing such fantastic results, and I kind of thought that's what trading was. I'm talking about close to 2,000% of account gain. It was just huge, huge, huge gains in financial terms. And then I woke up one day, around about 6:30, I sat down at the computer and everything just went to hell. So I didn't move from that computer to go to the toilet, to get a drink of water, to get something to eat until around about 6 p.m. So a 12-hour shift sitting, staring at that computer, and I was continually in a trade. So not the same trade, but I'd be in a trade, I'd get out of it, I'd go into another trade, I'd reverse that trade, because I was kind of spiraling through emotional trading, trying desperately to claw back the ever-increasing losses. By the end of that day, all of those gains were completely gone. They were completely wiped out. My account it wasn't quite at nothing, but it may as well have been for the amount of money that I had lost. One of the most stressful, kind of traumatic days of my life, I would say. It was incredibly difficult to go through, and then it kind of stuck with me in a very powerful way for at least a week. It followed me around every minute of every single day. I was miserable. But I did take away a couple of very important things that have stuck with me ever since and have helped me as a trader. Now, of course, there's the obvious things of I shouldn't be risking huge amounts of my account on any one trade. But those are, those kind of things are relatively obvious. And they're things that I do go over on this channel over and over and over again. There were another couple of kind of takeaways that I still sort of have with me to this day and I still use to this day, which aren't so obvious. Now, the first one was that I suddenly realized that everything could come undone as a trader very, very quickly. I didn't sit down at that computer and think to myself, I want to lose all of my money. I sat down at that computer with the aim of gaining some profit for that day. But when it started, the first loss, it was like a snowball, just kind of piling up and piling up, rolling down this hill, and everything started to get worse and worse and worse. And I was laser focused on this computer, and I couldn't pull myself away from it, because as the losses started gaining in size, the voice inside my head saying, I have to make this back, became louder and louder and louder. And obviously it led to complete disaster. Now, there was a period where I then thought about that and kind of extended it out, and I thought to myself, okay, so let's say I'm a trader 10 years from now, and I have a wife, kids, a mortgage that I can only support through this trading career, because back then I was thinking to myself, yep, I'm very close to going full time now and everything's going hunky-dory. What if I was in that position and that happened again and everything fell to pieces? That was quite a scary thought, because I I did lose control. I wasn't in control, and all that money was disappearing. Even though afterwards I could sit back and look at myself and say that was really stupid, I should have stopped. At the time, I couldn't and I didn't. And that was a really frightening thought for me. Now, what I did to kind of adjust that is a couple of different things. So the first thing is simply realizing that I can be my own worst enemy as a trader. I am my own worst enemy as a trader. It's going to be something that I do that is going to blow up an account. So I always need to be alert when I sit down at the computer. So one of the things I do for that is I don't have all of my trading account in my trading account. I keep as much of it as possible in a bank account, because then even if things start to go to hell, my ability to trade doesn't disappear. So if the worst comes to the worst, if I have one of these periods, I'm still protected, because the account will run dry, and then I would have to break out of that kind of emotional mindset, go to my bank account, or log into the trading account, fund the trading account, get my card out, put all the details in, put my code in, and then send that money across and then get back onto the charts. It's giving me that time to get away from it if that ever did happen again. It's very, very beneficial. Now also, if something happens to the broker, let's say some crazy movement on a market all of a sudden wipes out your trading account. If all of your trading account is in with the broker, your ability to trade disappears. If your broker goes broke, there's going to be a period of time when you are unable to trade. So by keeping that money separate, it protects myself. Now, I also have a separate account with savings. So even if that fails, there's still savings in the background because I'm putting all of these things into place to try and protect myself. It sounds crazy if you're learning to trade that you would have to have all these steps, but if you've gone through any emotional trading, you will understand why it is so important. And I just bring to the charts every day that I am potentially going to be my own worst enemy. I'm always alert for it. I'm always looking for the signs that I'm becoming fatigued or I'm potentially going to make some sort of mistake that could start to spiral. And because I'm like that, it doesn't really happen. I still make mistakes. Every trader makes mistakes, but they don't get out of control. They don't spiral. If I make a mistake, I'm instantly on top of it. I can shut down the charts, I can step back, and I can say, okay, that's one of my kind of, screw ups for the month. It's just normal, it's just being human, but it's not going to grow into anything absolutely enormous. The second thing is, I suppose it kind of comes back to your risk as well, but the main thing is, I understood after that event that I had to have something that I could repeatedly do. It has to be something that is consistent in what I am looking for, because when I was growing the account enormously through that period of time, I had a trading plan, but I would bend it and I would break it so I didn't have to have losses for the day. So if I had a loss, I'd want to make back that money. I would maybe kind of pull away from my trading plan and say, okay, so this is, I don't know, a trend line. I don't use trend lines, but it's looking really good. I want to make this money back. I'll take it. I'd look at a market and I'd say, okay, it's rallied really far, it's surely going to reverse, so I'll jump into this one. Or I don't want to miss out on this move, I'm just going to jump in. Now, over the short term, that can work. And it can work in a big way, clearly, because as I've mentioned, the account growth was enormous. But if I don't have something that I can repeatedly do, if I don't have something that I know I'm looking for, then it comes down to almost guesswork when you're at the charts. You're just looking for anything, any excuse to get into a trade, and that can play havoc on you when things start to go wrong, because if you start to have losses, the losses pile up. You start to look for ways out of it, and you start finding things here and there in the market to get you back in, and that's when that snowball starts. You have to have a trading plan that you have researched, that you know works, and that you know you can repeatedly do day after day after day after day. You're looking for the same things, because then, first of all, you can test it and you can see if what you are doing works rather than simply guessing. Because if you're guessing, what you're doing changes day by day, and how do you know that's going to work over the long term? If you have a trading plan, and if you know exactly what you're looking for, you can repeat it. You know what you're doing, you know when to fix mistakes because you know when you've gone wrong, you know the exact entries, you know the exact exits, and you know over the long term, following that is going to keep you in a good place. So, having something to follow, having something that you do repeatedly is absolutely crucial as a trader. Having a trading plan, but also sticking to it and always working on it and figuring out ways to improve it. Not only because maybe the market's changing, but also ways to improve it that's going to help you as a trader, help to protect you. Those are the kind of two takeaways that I took. Because before that, I was purely 100% simply gambling. Now, trading is to an extent gambling, but it's gambling with an edge. It's trying to turn yourself into the house. Whereas most people, 80% of retail traders fail at trading. That's just how it is. It's an unavoidable fact. The brokers now have to announce that, and it's a huge portion of people. The vast majority of them are either letting their emotions take control, and that kind of ties in also to the trading plan, because when the emotions take control, even if they have a trading plan, it just falls to pieces and they just do whatever they want to do at that moment in time. So think back to me losing all of that money sitting at my computer. If you want to be a trader, so it doesn't matter if it's full-time, if you want a secondary income source, you want to start managing your savings, your pension, whatever it is, you have to be willing to separate yourself from that 80% block of people. It's easy to think in your head, you know, yeah, 80% of people fail, but I'm not like that. Statistically, you are like that. It's almost certain that you are like that. You're making the exact same mistakes they're making. You're looking at the market in the wrong way like they are looking at it. You have to be willing to pull yourself away from that and do the hard things. Do the things that frustrate you. Do the things that bore you. Do the things that when you're sitting at the charts, you sometimes want to pull your hair out, because that invariably is what the professionals are doing. They're not just jumping into every move they see because they think it's going to do this or this. They have a plan and they are executing that plan. And if you want to make serious progress as a trader, you have to do the exact same thing. So those are the main things I learned from the absolute worst trading day I have ever had. And luckily, because of that experience that I had, I have never had to go back to that place. Now, that's not to say, after that kind of dreadful week of going through all the pain, that I was fixed. It still took me a long time, but that was one of the main catalysts for me to start to change. It's when I really started paying attention to myself and what I was doing, rather than simply sitting down at the charts every single bloody day and trying to make money. I started to think like a trader. I started to think like the people I'd read about in Market Wizards. I started to separate myself from that 80%. Okay guys, so as always, I hope that was helpful. I hope you're all having a fantastic trading month. I'm James Orr, and thank you.